Eric Mwadhe, Mwadhe.com, with the US market analysis for the weekend of March 19th, March 20th, 2016. We are looking at the markets here with about 50 minutes to close, and we are trading close to the highs of the day and the highs of the week. As you can see, the Dow is up about 136 points, up 0.78. So nice move, 0.5 on the S&P and the Nasdaq. Crude oil is down about 2%. Gold is down about 1%. Let's begin by taking a look at the monthly chart for the Nasdaq. As we can see now, evidence that the market decided to choose to hold the 50 level on the monthly, and since holding here on the 50, as we had suggested, one of the scenarios would be that the market would have a strong showing to the upside, which is what we are getting for this month of March. So right now for the Nasdaq, up about 5%, which is consistent with the behavior in the market over the last 25 years or so. In fact, going back to recent years, the market's been bouncing on the 50 monthly RSI level like it did here in 2010. It bounced off this level again in 2011, and coming 2016, we are holding on the 50 line, bouncing on it, which is a sign of a market that could easily, in the coming months, in theory and potentially, could actually be setting up to go and eventually tagging new all-time highs. So that is a possibility based on the monthly charts. But what we see here is there's still a little bit of a question mark as to the market's strength and intentions, because the market is coming back to test the recent resistance line on the weekly. As you can see here, this was the break point on the Nasdaq. This break on the RSI in late December has brought the market off those highs. We haven't been back there, and clearly we are coming back to test that level. That also happens to be around the 50 RSI level. So somewhere around here on the weekly, even with a nice move for the week, the Nasdaq week to week, if it cannot move above this level here, one can assume that if we see resistance, and especially if the Nasdaq now moves back below 50 on its weekly RSI, one can expect a swing trade to the downside. If we take a look at the Nasdaq daily, we can see that it is coming back to test the top side of its daily RSI. Now it needs to clear this if it is to see higher prices. Now keep in mind, some markets have already done that, so let me draw that line again. So on the Nasdaq daily, we are coming back to test the top side of this 1 year daily chart, and so markets need to clear that. There's also another line connecting recent resistance points. So this red line corresponds to where the Nasdaq has been failing recently. As you can see, off the highs in July, it hit that level. It hit that level here and pulled back below it for the highs there. We touch the red line for the highs there. So if the market wants to move higher, it has to take out those two lines. Otherwise, if we cannot move above those two lines and we show resistance on a day-to-day basis, if we confirm resistance here, then that suggests that potentially the next swing trade could actually be to the downside. Take a look at the Dow Monthly, and no surprise here. We can see that the market has decided to hold the 50 on the monthly. The last time it held the 50 was during this period here, and on the way back above 50 on the monthly RSI, which is this period here, you can see that the market staged a huge recovery in September of last year. So right now we are holding the 50 level, almost similar type action, and this month the Dow is moving its monthly RSI back above 50. As we move above 50, we tend to get a big reaction to the upside, which is exactly what we are getting in this month. For now, the Dow remains up about 6.5% for the month of March. And this is consistent with historical behavior for the Dow. As you can see here, we tagged 50 and bounced back above it for the lows of 1990. We did the same thing here in 1998. We had uniform activity support here for the lows of 2010. Same thing for the lows of 2011, and now coming back over the last couple of months, double bottom support for the lows of last year and this year. So the monthly chart continues to show that at this rate, monthly charts have improved, and one should not be too surprised if the market eventually decides to move to all-time highs on the Dow. Let's go to the weekly. And here what I've decided to do is take a look at a three-year weekly chart, so 3 years weekly on the Dow. Okay, and what we want to show you here is if you take the highs on a 3-year weekly chart and extend the highs, you can see that the Dow after a nice week is coming back to test the potential resistance line here on the weekly. So this is consistent with other markets across the globe, that the weekly charts are becoming a problem if the market can't clear that. So take a look at the 2-year weekly chart for the Dow, and you can see that we are coming back and testing the break, this break point here, seemingly innocent break in May, brought the market off the highs there. We haven't been back to those levels after recording an all-time high there. So if you draw a line from here, this is where the market could and has been responding at a line like that. You can see the last couple of times we've hit that line and stalled, the market did record a weekly closing high and pull back. Same thing here in November for the highs there. So right now we are coming back here in the middle of March. If we cannot move above that, then after a nice move off the lows here, the market is now potentially due for some type of resistance. So resistance on this red line would suggest that the next swing trade is down. Otherwise, market pools would like the market to show strength and move above that line of resistance, which again coincides with another line coming from the top side on the weekly. So those two lines could be resistance. Otherwise, the market needs to take them out and move above those two lines if we are to see higher prices in the coming weeks. If we take a look at the Dow on the daily, I'm pretty sure this is evident on charts and people are watching this, but if you take the daily closing high there and daily closing high there, draw a straight line, you can see that we are coming close to touching that same line here. So if the market cannot move above that line, clearly traders are going to look at that as being resistance and potentially suggesting the next swing trade could be to the downside. So clearly market bulls need to move above this line so as to give people confidence that the market has more upside. But interestingly enough, we are coming back to tag that top side of this channel line. Anything above that would be bullish. Otherwise, resistance would suggest the next swing trade is down. Over the last 2 days, we've seen the market post two nice gains here as the market moved its daily RSI above 69.1. And so for now, as long as the market is holding above 69.1 on the daily, one can expect strength in the general market. If we take a look at the Dow Transports, there's two ways to look at this in my opinion. The first one is the bullish argument, which is that the Dow Transports have finally cleared the resistance line on this weekly chart, RSI resistance line. Finally, the market is above that line, suggesting that we shouldn't be too surprised if the market continues to move higher in the coming weeks, even with pullbacks on daily charts. So this weekly chart does look good in terms of the RSI, and again, that's the bullish argument. Let me show you the bearish argument, which is one that the market is now coming back to test the break point of the highs there. So the way you do that is, this was the break in the RSI. That RSI break right there brought the market off those highs in 2014. At the end of 2014, we haven't been back to those levels yet. And so you can see that we can draw a line from here. Should be something like that. And we've hit that line a couple times here. 2015 for the highs there. We hit that red line again here for the weekly highs there. And now we are coming back here almost 1 year later. And if we cannot move above the red line, then one can assume that the next swing trade is going to have to be to the downside. If we take a look at the S&P 500, just like the other major markets we've seen, we can see here coming back to show nice support on the weekly, on the monthly chart going back to 1990. Nice support, which might explain why it's up 6% for the month so far. Here we had support at the 50 monthly level for those lows, and again here bounced off the 50 with double bottom support of those lows. So the monthly chart continues to look good and opens the possibility that in the coming months, it is not out of the realm of possibility that the market eventually goes on to record fresh highs. Now, if you take a look at the weekly, we have the same type of scenario here where one can look at this as being the signs of a breakout on the weekly RSI, albeit slightly. That move this past week brought the market above this line of resistance. So that's the bullish argument. So bulls would like the market to continue building on that and to continue higher. Having said that, there's an argument here after a nice couple of weeks to the upside since the lows here. This is such a strong move that at some point you can expect a pullback. If that's the case, the weekly chart does suggest that around here it would make sense for resistance based on previous behavior. As you can see here, that the market broke down. This break in May of last year brought the market off the highs there. And so we can draw a line from there, just like we did with the Dow Transports. And you can see we've tagged that line before, the red line with resistance for those highs. We found resistance here and here for the highs here and here, and now coming back to that same level. So it would make sense around here for the market to stall after a very nice showing of the lows here. Resistance on this red line would suggest that the next swing trade could very easily be to the downside on a week-to-week basis. On the daily, watch the S&P 500 daily RSI, because as long as the daily RSI is holding above 69.1, the market should continue increasing to higher highs in the short term. If it moves back below 69.1, then that might suggest that the recent momentum is coming to an end. Now here we take a look at the hourly chart. We can see a little bit of a reason why the market could stall, and it's basically based on the behavior here where the market has been making a slight improvement in price highs here. While that is taking place, we can see that the market is coming back and showing a slight negative divergence. So this could be a problem. Of course, we'll see. But net, market's been responding well. We've had a nice run. We are hitting some resistance levels on the weekly charts. And I think if the weekly charts do show resistance, and given the negative divergence on some of the short-term time frames, more than likely, we might be setting up for a pullback in terms of a swing trade. Otherwise, we shall see. Eric Mwathe, Mwathe.com. As always, good luck, peace, and blessings. ESCS.